Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. So it has begun, as you are likely aware at this point. The U.S. and Israel have begun airstrikes on Iran, and there has been a wave of retaliation across the Middle East. Markets just opened, so it's about 6:57 p.m. Eastern time right now, and we are already seeing significant volatility overnight. It's anybody's guess how markets are going to react to the developments in the weeks and months to come. But we're going to go over several charts and the reaction that we're seeing right now, the immediate reaction overnight. We'll get into some of the news. We got a lot to cover, so stick around for this one. Stay tuned. Now, I've got this page over at Yahoo Finance opened up right now. Sometimes people laugh at me for using Yahoo Finance like I'm a boomer or something. But I do like the page sometimes. It gives you a nice overview of the headlines and market action. The reason I've got it open here is you see U.S. markets, the S&P futures, Dow futures, NASDAQ futures, and overnight trading all down, all in the red. Russell 2000 also in the red, actually leading the way to the downside. So U.S. markets not liking this news initially, but there's a lot more that is going on than just the stock market indexes. A lot of movement in silver, gold, oil. We're going to take a look at all of that. And, like I said, nobody knows exactly how this is going to play out over the days and weeks to come, but I think we can expect massive volatility. It's a good time to be holding physical, tangible assets, not financial advice, of course, but, that's what I've been doing for years, is accumulating those. If you're thinking of doing that, you can go over to SD Bullion. That's where I buy mine. There's a link down in the description right now. They have got some sales on American Silver Eagles. If you get 500 of them, it's $7.99 over spot. Now, that might seem like a high premium, but in the days and weeks and months to come, you might be looking back on this and thinking, how cheap these were at this time. Junk silver, this would be my pick right now for what's going on in the physical realm. $0.50 at spot price. So if you're okay having your silver in 90% form instead of 0.999, you can get one of these rolls at spot. Not bad. So let's take a look at the silver chart, and then we'll kind of move on. So this is a chart we've been looking at for a while, the recent setup in silver. It looks to me like following the sharp correction at the end of January, what we have here is kind of an ugly inverse head and shoulders pattern. We had a breakout last week. Actually, the week before, right? Friday, the 20th. So the previous Friday, we had a breakout above the neckline. I suggested that that was a buy signal, a sign that we would imminently see a rally. And sure enough, right now, we're trading at $95. Silver right now up 2% in overnight trading. Here's the 1 hour candle. This is the first candle that we got following markets opening with the big developments over the weekend. Clearly, this zone of resistance has been cleared, and I think we're on track to finish possibly even this week above $100 silver. I mean, we're, less than $5 away. I think we're back to triple-digit silver very soon. Now, let's take a look at what's going on with energy, because oil, predictably, has surged following the beginning of open conflict with Iran. We'll get into some of the headlines here that are driving this, but let's just look at the price action. So here's WTI crude, gapped up massively on the open, although maybe a little more tame of a reaction than we might have expected. But the thing is that right now there's a lot of fog of war. It's not immediately clear if the Strait of Hormuz is completely shut down. More on that in a moment. But right now we are seeing WTI crude up 7% at the moment. That's the move. Brent crude. Now, Brent crude, very volatile here. So this is like European oil prices, right? Brent crude opened up, went as high as $82 at the open. Right now it's back down to 78, but still a huge gap up. Now, WTI, we've been following this. for the past several weeks. We had a consolidation pattern here, which we broke out of. I believe this was on the publication of that Axios piece, which suggested that a broad, larger than expected Iranian war was on the horizon. We saw a breakout from that consolidation. Then there were some comments here, this dip from, I believe it was the foreign minister of Oman. He said those peace talks that we had were going well. Saw it dip back into that range, but clearly at this point, hindsight's 2020, I guess, but I had mentioned that it was likely a ruse, the peace talks, and how previously the 12-day war was launched during peace talks. Well, sure enough, we had these ongoing negotiations, but that was likely a distracting tactic to get the Iranians to drop their guard somewhat, although you have to wonder how effective that can be, right? How many times can you pull that trick? But seemingly the strikes on Iran are thus far fairly effective. The Ayatollah has been killed, according to news reports. Regime change, clearly the target here of this conflict. And really what's going to determine what we see happen to the price of oil is going to be the capacity of the Iranians to disrupt fossil fuel traffic throughout the Middle East, right? And the extent of their retaliatory strikes. So getting to some of the news regarding the Strait of Hormuz. So this is the Strait of Hormuz, for those of you who are not familiar. Here's Iran. Here's Israel. Here's the Strait of Hormuz. Here's Saudi Arabia, Bahrain, Qatar, Kuwait, UAE, all the oil, natural gas that is produced by these Middle Eastern nations. Quite a bit of it is put onto tankers here in the Persian Gulf, has to sail through the Strait of Hormuz, which you'll notice has this long shoreline here in Iran. And they are capable of striking vessels that transit the Strait of Hormuz. Something like 20 to 30% of global oil production every single day has to transit that strait. So if that gets shut down, you can imagine the impact that that will have, given that demand for petroleum, for energy, is somewhat inelastic. And a disruption on the order of 30% to 20% of production could move the price quite a bit. And we are seeing that there are ships that have been struck. According to this report from the BBC, 3 ships attacked near the Strait of Hormuz as oil prices surge. Now, it's kind of hard to say. Is the strait completely closed? Some ships, some tankers certainly have been struck. That is going to lead to a lot of hesitance on the part of tankers to transit this, right? So the Maritime Security Center of Oman has confirmed that a tanker anchored offshore was hit and evacuated. Now, in this case, this actually appears to be an Iranian vessel. Kind of odd, right? Iran specifically hit one of their own, writes tankertrackers.com. Tehran's tanker theatrics on full display. But it may be that they are trying to send a message here without escalating things excessively, although it's hard to imagine them being escalated much more than they already have been, right, with decapitation strikes against Iranian leadership. But what they're doing is preventing ships from transiting. Maybe they could technically get through, but given the fact that some of these ships have been damaged by missiles, it's going to cause insurance premiums to transit the strait to skyrocket, and a lot of ships simply won't take that risk. Here's a video of one of these ships, oil tanker Skylight, struck in the Strait of Hormuz, and Maersk, big shipping company, is now suspending all shipments through the Strait of Hormuz. So this will have a huge effect on global oil markets. The question is, how quickly can the U.S. And Israel suppress the Iranian ability to strike ships in the Strait of Hormuz? And, that is the big question. That's why we can expect significant volatility here. A lot of ways this could play out, right? Could be that tomorrow, by the time U.S. markets open, you could see a major correction in oil, right? It's going to be driven by headlines here. However, I don't think that's the highest probability event. I believe that there is a higher probability that the Iranians, in fact, do have the capacity, if not to shut down the strait completely, to continue to discourage tankers from making the transit. And that alone will be sufficient to drive oil prices higher. From a technical standpoint, this breakout here, and if we zoom this out further, let me switch this to a daily chart. If we zoom this out further, oil had been in a long downtrend from the 2022 peak, culminating in this downward pennant pattern, which we broke out of rather sharply in January, and it's moved sharply higher from there. So this breakout occurred around $57. Right now we're at 71. I mean, a new bull trend has been initiated in oil. Now there may be some demand destruction, right? There may be a glut of supply in certain areas like the U.S., but that will get cleaned up real quick if the Strait of Hormuz is shut down for any length of time. A glut of supply in the U.S. will, be depleted quickly. Now, it's not like in the U.S. we're going to run out of oil. The U.S. produces plenty of energy for itself, but we could see much higher prices. That could have a significant impact on U.S. markets, right? Again, there's a reason that all the major stock indexes here are in the red today. At market open, down every index down over more than 1%. Higher oil prices means higher energy inputs. A lot of the current valuation in stocks, has to do with AI, data centers, etc. Skyrocketing energy prices, not very good for that market environment. So this is going to be something that we have to keep an eye on, and there's a real potential that we could see a significant downturn in U.S. markets. We've talked about the Shiller PE ratio. Right now, the S&P 500 Shiller PE ratio around 40. Only time it's ever been higher than that was the dot-com bubble. So, with equities priced for perfection and the opening volleys of what could possibly turn into World War III here being fired, there's a lot of risk in these markets. But I think there's a lot less risk in gold. Not financial advice, of course, silver as well, tangible safe haven assets. You've got gold breaking out today as well. Here's the 1 hour chart. You can see this one candle. Gold was up 2.05% at the market open, currently trading around 53.68. And if you want to see get an idea of the kind of volatility that was in the gold market, look at this. This is the Pax Gold cryptocurrency, which tracks the spot price of gold, but it trades 24 hours, unlike futures contracts. So this spiked up as high as 55.91 on the news of the attacks on Saturday. But, they oftentimes will conduct these exercises over the weekend so that the spike in volatility occurs when markets are closed. By Monday morning, things can, kind of get back to normal. But I think that we might see a different dynamic this time around. I think, famous last words, this time it's different. But we've got this report here. President Trump says Iran operation could take 4 weeks or less. So this is going to be bigger than the 12-day war. It's got to feel a bit existential for the Iranians as well, given that the aims here clearly extend far beyond the Iranian nuclear program, and full-on regime change is the objective, apparently. I mean, it certainly seems that way from what we've witnessed thus far. And Iranian retaliation, depending on how that goes, there's a lot of targets in the Middle East that the Iranians could put in their crosshairs, right? A lot of oil and gas production, a lot of highly flammable facilities. So, that's something we got to keep an eye on too. But even if things go according to plan here, this could take weeks, right? So the volatility isn't going to stop. You could see gold, oil, all that stuff correct tomorrow significantly by the time U.S. markets open. And then by the end of the week, they could be trading sharply higher, right? So there's going to be wild swings here. So if you're attempting to trade these markets, well, you're going to have a lot of intestinal fortitude because there's going to be a lot of moves. It's going to be interesting to see how China opens. Now, China is 13 hours ahead of Eastern time. So right now it's about 7:12. So that means that it's around 8 a.m. Monday morning in China right now. And their markets open at 9 a.m. China Central Time. So, likely we're going to see a gap up. This is their silver price. Closed on Friday, 23,159 Chinese yuan per kilo, but this price is largely irrelevant at this point because it's going to be much higher on the open, which we will see in less than an hour's time. So this will be something to keep an eye on. I believe this 23,159, I believe that is over $100 already, or slightly lower. I didn't do the math here leading up to it. I'm not going to do it now because, again, this price is largely irrelevant. Silver will be over $100 tomorrow in China, almost guaranteed, until it opens. Can't say 100%, but that is very likely the case. Let's see. Here we've got an update from Bloomberg, updated about an hour ago regarding the rally that we have seen in oil and tanker traffic, according to Bloomberg here, through the Strait of Hormuz, handles 1/5 the world's oil and gas volumes, has largely halted, with a self-imposed pause in place by ship owners and traders as the conflict spreads. So again, the Iranians in practice don't actually have to fully shut down the Strait of Hormuz, nor likely do they want to. It is likely that they would prefer to allow tankers that are servicing their geopolitical allies, such as China, through without a problem, and discourage tankers which are otherwise aligned. But at this point, it may simply be that it's too risky for any of these tankers. So if this doesn't resume, if they can't get the flow of oil going through the Strait of Hormuz in short order, you will see much higher oil prices, potentially drastically to the detriment of Western economies. Again, the U.S., we're not going to run out of oil. We'll be okay, although it might become more expensive because it is a global market. But who should really be sweating right now is the Europeans. They get a lot of this LNG on tankers, liquefied natural gas. If that's not flowing through the strait anymore, they may see drastically higher gas prices and energy prices in Europe. Could potentially spell a massive economic recession there as energy prices become simply too high to conduct any kind of meaningful industrial activity. So again, this is going to have far-reaching effects. Here's another headline about a tanker. This is a non-Iranian tanker that was struck in the Strait of Hormuz. 15 Indians. So this is the new Indian Express, Indian publication. So I guess that's relevant to their readers. Among the 20 crew, 4 injured. But again, you start seeing your crew injured in these strikes, you're not going to want to transit the strait. So you're gonna see the effect, and who knows what it'll be, right? I suspect that before all is said and done, over the course of the next 4 weeks, as the president says, my forecast would be a move towards $100 per barrel oil. It's a round number. It's probably a psychologically important number. But again, if they can't get this flowing again, you're going to see any oil surpluses depleted rapidly, right? And we do have the strategic reserve here in the U.S., of course. You may see that tapped into. There will be a lot of stopgap measures, but at the end of the day, none of that is sustainable. And anything you drain from those emergency reserves in the future, you're just going to have to take that off the market to fill those back up. So, that would cause perhaps smooth out the volatility, but it just means sustained higher oil prices for the future. Also in the news, you've got Iran attacking a European nation for the first time. So there were 2 missiles reportedly launched towards Cyprus, which holds UK bases. So there's potential for further escalation here. And I suspect that the Iranian retaliation is not complete. And, there could be a flashbulb moment here at any moment that could, change things dramatically. Could be, we're ripe for a black swan. Of course, technically not a black swan, I suppose, if it's something that you can predict. But I think that there's a lot of complacency and normalcy bias right now. And so, these things are not being priced in, and markets could have a huge reaction when these things play out. So here's one from metro.co.uk. I feel like most of these UK publications you got to take with a huge grain of salt, but they got a headline here: Iran will be waking up sleeper agents across the West, says former Israeli general. Now, I feel like we've been hearing about these, sleeper agents for quite some time. It could be an overblown threat. And yet, this could also be your proverbial black swan. Could lead to serious escalations, something that you should have at least in the back of your mind when it comes to your own personal operational security and, just personal security measures. Might be a good time to keep your head on a swivel here. Just saying, probably doesn't do any good to be overly paranoid, but, I think we're very accustomed to seeing these conflicts remain firmly overseas, and there's certainly a possibility that that may not be the case. And you can imagine that any domestic problems, whether it be sleeper cell, cyber attack, etc., could seriously disrupt these markets. Again, Schiller PE ratio right now over 40. It's priced for perfection, and I don't think that what we have really qualifies as perfection. Here's one from PBS. Russia condemns U.S.-Israel strikes on Iran as pre-planned and unprovoked act of armed aggression. So you're seeing this sort of anti-U.S. hegemon alliance, Russia, China, Iran, the remainder of the BRICS nations, rallying on this attack. But, this is probably why regime change is the name of the game, right? And it's possible that Iran, they may not even care about putting a Western-friendly power into Iran. Maybe they just want to destabilize the region, balkanize it, and, get rid of that geopolitically misaligned entity in the Middle East. And when I say them, I'm referring to Israel and the U.S. They may want to just destabilize Iran, take it off of the chessboard as a player. And that's kind of what we've been seeing, right? We saw the attack on Venezuela with the arrest, abduction, one man's arrest is another man's abduction, I guess, of President Nicolas Maduro. That's another, anti-U.S. hegemon figure. I know who's running the show there in Venezuela now. The vice president, I think, is the acting leader, but likely, on the U.S. payroll there. So they're kind of taking down these Russia-Chinese satellites in a series of moves, and Iran is just another part of this. This is all likely leading up to a conflict with China, of course. Who knows what that timeline is? That might come sooner rather than later. China might see what's going on in Iran right now. If the U.S. has a 4-week operation in Iran, then China may think, well, this is the opportune time to go ahead and, reunify forcibly Taiwan. So again, massive volatility is going to be the name of the game. And I don't think, look, this time does feel a little bit different. It's different in terms of the scale of the attacks. The decapitation strike against the Ayatollah, I think, is a sign that, in fact, this is different than the previous strikes we have seen on Iran. This may go on much longer, and it may have much farther-reaching effects. So, it's a good time to hold physical ounces. Keep an eye on the charts of gold and silver. Tomorrow is going to be a very interesting day. I will try to hop on and give you an update regardless of what happens. Interesting here, you got gold, silver, safe haven assets rallying. Bitcoin, not so much, right? Picture for Bitcoin here. Still looking kind of grim. Not that I hate Bitcoin, but it does appear that the next major zone of support is down here, maybe around 30,000 to 25,000. I posted this chart and I had someone tell me, like, do you even do any technical analysis? Obviously, there's additional zones of support above that. Yeah, well, sure, there are. I mean, you could see support here, maybe, right? I mean, there's a lot of little spots that the chart has touched, maybe here. But the major zone of support, I believe, is down around 30,000. And, it's kind of showing you that Bitcoin maybe isn't the safe haven asset that it is often touted as. I don't want to necessarily go down this tangent here, but I'll just say, Bitcoin's not a safe haven, right? Bitcoin is a highly speculative technology. Maybe it gets massively adopted. Maybe it doesn't. Could go up a lot from here. Probably going to go down a lot first before it does. And, you just watch what it does on days like today. No spike in Bitcoin, but there's a spike in gold, oil, and silver. Interesting how things that you can use in the real physical world are what people want to get their hands on when there's a crisis. It's funny how that works. But anyway, do me a favor and share this video. Follow me over at x.com/stacksmarter. I will be giving you updates to the best of my ability as this volatile situation plays out. And subscribe to the channel and click that bell notification icon because, look, things are getting, I hate to say interesting because they are. Keep in mind there's also a human toll here, so I don't want to sound like a ghoul covering this stuff. But there's a lot of things happening right now in the world. Right? I believe it was Vladimir Lenin who said there are decades when nothing happens and there are weeks when decades happen. Not that I'm overly fond of Bolsheviks, but he was insightful with that comment, I think. So now is one of those times, and I'm going to do my best to keep you updated. So do me a favor, leave a comment, smash the like button, share the video, subscribe, and I will catch you next time. Thanks for watching, everybody.